Let's get Udayan Mukherjee in to give us his view on what to expect here on. Hi Udayan, good morning. We were at the Morgan Stanley conference a couple of days ago, and Ridhim Desai told us that everyone's telling him to wake up, and the fact that India is the biggest game in town at this point. This kind of optimism we haven't seen for a very long. Do you expect to see a sizable pre-budget rally?
Morning, Sonia. I think we are probably on our way to that one. Just about a month to go for the budget, and that, as you mentioned, clearly is the next big trigger. I think the noises will start this week or early next week and continue right till the first week of July, and that's what a lot of global investors will be watching very closely. You did see a very large FI number yesterday, and the Nifty's post the election day rally, the election result day rally, the Nifty has spent time in a bit of a range. Individual sectors have done well, but the Nifty's broadly been in that 7,200, 7,500 kind of range. So I'm also wondering whether this consolidation phase will now spark off or provide the platform for the next big launch pre-budget. So if all things are equal globally, I think there's every possibility of another big thrust before the budget. I don't know whether it takes the Nifty to 7,800 or 8,000 even if flows actually pick up. And yesterday's ECB meeting also paves the way for some more calm and liquidity injection into performing markets like India. So it's very, very conceivable that you get a pre-budget rally starting as early, or which might have started yesterday, unless there's something bad which happens in the global space which we can't see today.
Okay, hi Udayan, good morning and good to have you with us. You expect that the markets will read the ECB move as positively as they did way back in December 2011. At that time, the Nifty moved actually from 4,900 to 5,400. It was a sizable rally. Do you think it can be all good with what the ECB said yesterday, or will the warnings of the actual downturn in Europe at some point resurface?
At some point is the critical phrase, Lata, as you said. Right now, India is in a, as Sonia said, in a purple patch kind of a situation. Things are going right locally, the currency is stable, it's an outperforming market. And whenever there is a sign of some more liquidity injection in the global space, the performing market takes away much of that liquidity, or it will get a disproportionately higher share of any new liquidity which is being injected in the global system. To your question on whether the global system is completely comfortable, the answer to, as far as I'm concerned, is no. And that is the only wrinkle or fly in the ointment at this point, because locally things are as good as it can get for India. We are at the right part of the cusp. The government's making the right noises. Things are slowly beginning to turn. The mood is better, money is coming in. So locally things are good. It's just globally where China is a bit of a ticking time bomb and continues to be, despite some of the recent data which has been supportive. Europe looks like it's headed into a bit of a mess, and the central bank is very worried out there. These are not great long-term portents. We've, remember, had a very, very good first half for equities. So I'm wondering whether some of the global problems that we're speaking about now could lead to turbulence in the second half. But for the moment, I think more liquidity in the global space for a market which is heading into a budget and is feeling good about it, I think we can probably have the ingredients of a bit more of a rally in the days to come. In the weeks to come, I think we need to watch the global space more carefully.
Does this feel like 2003, Udayan? I mean, we were sitting on the cusp of a huge rally and probably not recognizing that it would be as big as it finally turned out to be. Is this something like that?
It's possible, and that's what everybody is debating and talking about. The start has been phenomenal. You've had a few events which can actually lead to a 4-year kind of a cycle. So I think events are conspiring in that direction to lead us into a multi-year kind of a phase. So it's possible. We've had a fantastic start for the markets already. India's head and shoulders above most of our peer markets. But I think what's most important, Lata, right now, or most encouraging for market watchers, is the way the market's spreading out. It's not just the Nifty. The Nifty's done well. The Bank Nifty has done well. But I think the big story of the last 20 days is the way mid-caps and small-caps have started doing. And this despite the fact that there is no retail euphoria in the market yet. DIIs continue to be on the sell side. It's not as if mutual funds are soaking in billions of dollars every day. Sure, on the margin, some smart money locally may have got into mid-caps and small-caps. But there is no retail euphoria which is backing the kind of spreading out of the market that we witnessed in the last 20 days. So minus any retail euphoria and participation or domestic participation, we've already seen the mid-cap and small-cap end of the market starting to perform, which I think is the most encouraging thing which has happened in the last 20 or 30 days. So time will tell. These things can never be predicted, but we could be at the start of a much bigger cycle. Locally speaking, I think the ingredients are all there. Globally speaking, not quite so sure, and that could be the only one which could dent the hypothesis of a much bigger cycle in the years to come.
In fact, the government is at this point making all the right noises, Udayan. Only execution is left, I guess, in terms of, solving some of the oil under-recovery issues or the potential of many projects being unstuck in sectors like coal, etc. What is the next big trigger that we need to watch out for from the government's table?
I think it has to be the budget and the run-up to the budget, Sonia. But as you said, the government's making all the right noises. And the key shift which has happened over the last month and a half is that the market is now looking at what the government or looking at New Delhi with an inclination to believe what is coming out of Delhi. The last 4 years was all about being cynical about New Delhi, and that's done a complete U-turn. Now the market is primed to believe what is coming out of New Delhi, and that I think is a big shift. So, I don't think the government needs to do a lot in the budget. It needs to do one or two small things, because the market will then give it the benefit of doubt and say, here is a government which has started the process and will continue to do things over the next 2 or 3 years to lead us back on track. So I think the market will give the government the benefit of doubt, and Mr. Jaitley does not have to do a lot. He just has to avoid some errors, do a little bit on the fiscal front, make a few good noises on FDI, talk about GST, and I think you will probably have the ingredients of a good rally going into the budget. So I think this whole orientation towards policymakers has changed from a market point of view.
Okay, even as you spoke, then the bond markets, the bond yields have touched 8.5, the first time in 5 months that they would have touched 8.5.
That's quite a significant move.
Yes, and just about 4 months back, we were all cribbing about that huge government borrowing program that will hit. And even now, there is no guarantee that the government borrowing program will not be a little higher. The market is open to it, that the previous numbers could be recast. But I mean, the mood is so bullish. Look at the amount of FII buying. And Rajan's stance was read as at least no rate hikes, and many people have even advanced their rate cuts. I mean, it's so much euphoria. Yesterday, Jayesh Mehta was actually calling for 8% sometime this year on the bond markets. Okay, on that note, then, asset allocation quite clearly is skewed against equities at this point in time. What would your advice be to retail? Just get out of gold and bonds and FDs?
We were talking about this a few weeks back, Lata, but I don't see signs that retail has started skewing asset allocation back towards equity in any significant way. That still hasn't happened. So I think this painful waiting period continues for a lot of people. They watch the markets and mid-caps go up every day, but I don't think people are committing money. On the other hand, if you talk to a lot of retail investors, they are actually waiting for gold to come down to 25,000, 26,000 and see it as an opportunity to load up on gold once again. So I think the anchoring runs so deep in the minds of a lot of retail investors that it'll take something bigger probably to shake them out and bring them towards equity. Because, it's a, I don't know, 10 or 20 year bull run in gold. People have made money every time they've bought it, and therefore they're still waiting for gold to come down and looking at every dip in gold as an opportunity, rather than saying this asset class might have seen its best days and its best days may be behind, and therefore we'll need to look at something else. So I would say that from an asset allocation point of view, people do need to move out of gold. Real estate is still not performing. I know the mood is much better. Real estate stocks have done well, but on the ground, real estate has not moved that much. So I think gold and real estate needs to be pared down in the portfolio. You need to look at equities. And I think fixed income will also start delivering the way bond yields have started coming down. Whether rates get cut or not, maybe we'll have to wait for longer. But the way market rates have started coming off, I think capital gains in the fixed income portfolio will also start accruing. So I think the best bet is to still have a fixed income plus incrementally larger amounts in equity kind of a stance and pare down gold and real estate. But really, I doubt whether retail's warming up to this idea yet. I think all this is falling on deaf ears.
What about, yes, it is actually. We hear from a lot of retail investors every day, and nobody seems to be as convinced as we are. But in any case, what about PSU stocks within? Because, you know, that's been the big moves in the last many days.
I think you have to differentiate a little bit. Last few days, weeks, all PSU stocks have done very well. You know, you can see why oil stocks are doing well. Because I know BPCL is up 80% this year, but 80% from what? You know, just look at the performance over a 5-6 year period and how poorly these oil stocks have performed. So I don't think people are coming to this party late for a lot of these oil companies. They can actually go up a lot more from here if some of the things which the market's talking about come true. I'm not just talking about the gas price, but also the way under recoveries are coming down. If in the budget this sector gets even a mention, because it's always got the wrong end of the stick from policymakers, I think these stocks can radiate much more from here on. So you can understand where the oil and gas stock rally is coming from. But by the same token, stocks like MTNL, HMT, RCF have also gone up such a lot that I think this PSU rally is picking up a lot of cats and dogs along the way as well. And I'm not terribly convinced that everything will be resolved quite as miraculously as people think. So I think you need to differentiate, go for the energy space, go for some of the power related, not just the power utilities, but non-utility power companies in the public sector, which might also generate very handsome returns. But do start differentiating now, because everything in the PSU space has gone up between 50 and 80% this year.
All right, we just have a minute to go, Udayan. So before we let you go, who are you betting on in this World Cup? I mean, most bookies fancy Brazil and Argentina to win. What's your call?
You know, I hail from Calcutta, and there are only teams which exist, two teams which exist out there, Brazil and Argentina. I'm in the Brazilian camp. Initial portents are not great, but I'll stick it out with Brazil. Because I must tell you a quick anecdote before the markets open. Yep. My first World Cup, which I watched at a stadium, was in Japan. And I was there at a Brazil versus England match, and I was wearing a Brazil shirt. And at the end of the match, a few young English women pointed to me and saying, look, a jubilant, a Brazilian. And the other woman was telling her that, you know, it probably is not a Brazilian, it's probably a guy from India, because they support Brazil as passionately as the Brazilians do.
So you book your tickets?
So you are going for the World Cup this time as well, right?
No. I'm here. I want to see the first budget out.
Oh, loves die hard. Thanks.
We can't believe you just said that. But Udayan, in any case, thanks for joining us. We'll see you again later on.